What's going on, guys? Welcome into today's episode of Money Moves. As always, your host, Matty A., my co-host, Mr. Ryan Breedwell. We
What
talk
up?
all things stocks, real estate, and personal finance, and a little politics because, let's be honest, policy impacts what money moves you're going to make. We
100%.
have a great show for you guys today. If you're new to the show, don't forget to hit that subscribe button.
Yeah, grab a stone
As well
tablet.
as if you enjoy the show, all we ask, leave a review, share it with somebody that you know can get some value by participating in these conversations. And as always, don't forget to check out millionairemindcast.com for all the great the resources and tools that we have available for you guys. Today, 4 years ago, Mr. Breedwell, you know what happened?
The stock market crashed.
The Dow plunged 10% on COVID fears amid COVID for its worst day since 19 market crash.
That was a pretty wild time. That was my first real market cycle that I went through as an advisor, and it was pretty crazy. It was so fast. I'd never seen stocks move down that fast. That was just nuts.
And we're most likely going to see some scenario in the next 50 years that will probably have a similar result, right? We can't obviously predict what it's going to be, what the black swan, but there will most likely be another one. There's another scenario that happens. With that perspective now, looking back and going through that experience and taking the actions that you did, is there anything you would do differently? More of, less of, not at all?
Yeah, I would have gotten the market 5 days earlier than I did.
5 days earlier.
I pulled the trigger on the 28th. I saddled up on the 28th of March, and I put everything back into the market for towards equities for clients that had that risk tolerance. When that was not a popular opinion, let me just put it that way. But we put all of our clients back into the market.
Because the world has never really seen a pandemic.
No.
At least not in any close generational timelines.
And I wish I would 5 days earlier, because I would hit the rock bottom of the market. I was 5 days off the bottom of the market for nothing else better than a gut check guess. But that was what I wish I would have done different. I wish I would have bought more tech. Yeah. But anything you bought made money. It was the late 90s again. You could have you could have thrown a fucking dart, and anything you would have bought would have made money.
Was winning.
Yeah. Any equity focused ETF, mutual fund, stock of a large cap, growth oriented.
What was the biggest mistake people made during that time that you would love to spotlight so they don't make it again on the next one?
Timing the market. We didn't time the market, although it sounds like, when I say what I said, it sounds like we're trying to time the market, doesn't it? No. We just we were still fully invested. We just reallocated out of bonds and commodities and gold back into stocks. We didn't get out of being invested to cash. That's timing. We allocated to other areas that were losing less money. And then once the losses settled, we reallocated back over there. I think the biggest mistake that a lot of people made was waiting too long to get off the sidelines. A lot of people did it right towards the end of 2021 and then got smacked again with another massive market cycle or true recession through 2022 and the beginning of 2023. That's the biggest mistake, because if you would have just kept your money in the market, you would have made all the returns and then some from the market recovery and cycle in 21 or 2020, and then made money in 21. And then you probably wouldn't have gone down into your principal riding through the cycle of 2022. It's pretty wild to see what a little time in the market can do for a portfolio, especially when the market starts working in your favor.
Yeah. I know all of our millennials, Gen Zs, and even now, you want to know what my kids are called? The young generation?
Zoomers, right?
That's the one before them, but not really. They're actually now officially labeled Generation Alpha. So we're going back from Z to A.
Gen Alpha?
Gen Alpha. That's what my kids are.
Wow, that's cool.
Yeah. And we're going to raise a bunch of little fucking alphas. All these little soft soy crybabies in Gen Z.
I do love seasoned edamame. I want to throw.
I like some seasoned edamame too. TikTok is on the docket and being threatened more than it has seriously than before.
Yeah.
It's been on the radar for quite some time, but President Biden has said that he will sign the bill if it makes it all the way to his desk. And we're seeing more and more votes come on to officially ban TikTok. I had seen a video that Trump actually said he was against the banning of TikTok, even though he said, hey, TikTok in other countries is actually a lot safer and more sane. It's crazy how the algorithm in the US seems to be polluting the minds of the youth with a bunch of BS. That being said, he goes, if we ban TikTok, that's going to put all of the power back into Facebook and Instagram. And he seemed to be a little bit against that, which I was actually pretty surprised by. What do you think? Should TikTok be banned? And is that a concern that Facebook and Instagram will take more market share, good or bad?
I'm not a fan of TikTok. I think that they just try to manipulate younger people with, like you were saying, literally a dumbed down version of the algorithm that they use in Europe or really in China. And I also don't like Chinese-owned companies working domestically in the United States. China does not like the United States. So there's going to be something wrapped up in that's not good, or there's some angle, right? Second to that, I don't know if it would be a big deal if TikTok was gone, because TikTok would just be gone in the United States. We have Instagram, we have Facebook, we have Snapchat.
Yeah, a lot of them
have
the very
X.
same capacity.
They do the same thing on their own platform and
they're
their way.
American-owned companies.
Correct. So that, to me, is safer. And, for example, the European Union has a lot of U.S. products banned, food specifically, but banned products that they don't allow imported to their country. That doesn't mean they hate the United States. They've just decided for their consumers that's not a good idea. And so I don't think there's an issue if we were to do something like that, and I wouldn't be upset if TikTok got banned. I don't have a TikTok account, and it would remove a bunch of jackasses off of TikTok giving financial advice.
Yeah. The American dream now costs $3,455,305. That's the estimated lifetime cost of common milestones, including marriage, 2 children, a home, healthcare, cars, and education over the course of one's lifetime. In fact, the average lifetime earnings of Americans across all education levels is approximately $2.3 million. So you can see the American dream is far outpacing the earning power and potential of Americans. And that was pretty interesting just to see that financial breakdown. And ultimately, do you think that is why the American dream is losing steam and momentum? Is the vision and what once was achievable is now becoming much clearer to people that it is not as attainable?
I think that people have got their perspective or things that are, quantifiable. So let's talk about $35,000 wedding, first of all.
What? We dropped 50 on ours, and I will say this, if it wasn't as lit as it was, and we didn't have so much freaking fun at our wedding.
My wedding was $10,000.
We went
$9,800.
It was the best. I'll just say it was the best 50 grand I ever spent.
And I got $9,940 for my guests.
But that
I'm not kidding you. So my wedding was free.
$3.99.
I actually made enough.
You were coming out.
I made enough. We joked. The next day we went out to breakfast with the difference.
That's pretty funny.
Yeah, because my parents gave me a little bit of money. We had to come out of the pocket for the rest. And then we had to pay for the cake. Everybody's like, oh yeah, the wedding. Like, how much was your cake? A couple thousand?
Yeah.
My wedding cake was $80. We found some lady. She made it in her house in Carson City. I'm not kidding you.
See,
we were
right.
We were just gangster budget busting. Catch me at the Four Seasons, $4,000 a night.
But I think
but that was important to me. So I think what I was going back to. Sorry, I was getting silly there. But people put this like my wedding has to be. I did whatever. We did exactly what we wanted, and we found a way to do it within a budget that made sense for us. Because literally the day after I got married, we also closed on our home and moved in. So our first house we bought together. There was priorities, and my priority was to get a house.
Yeah.
And so I said, am I going to buy a house, or am I going to put this money towards a wedding? And I'm not hating on the memories or anything. It doesn't make sense to me to spend a ton of money on a wedding because I think you can get married. I think that when you're just like a lot of individuals, hopefully my wife doesn't listen to this till tomorrow. I just upgraded my wife's wedding ring. And she's going to get that tomorrow. But the wedding ring she had when we got engaged and what we had then, that made sense for us. And it's a beautiful ring. but now I have the means to get her a ring that I more so would have liked, something that stands out a little bit more, something that's a little more opulent. She deserves it. I can afford to do that now and it not put me in a position where we were back then. I could have bought the same ring I got earlier this week at that time, but I would have had to fully liquidate an investment account that I didn't want to fully
You were
liquidate.
living below your means, thinking smart and intelligently. And I think what
that's
you're
important.
getting at is what I heard you say is you had a priority over here that was more important than the money that would be required to spend over here. And I think
Because
people
most
are
people,
rethinking what that like the American dream of, right, going back to the post here, the American dream of cars, houses, children, marriage, all of the education. People are looking at these core topics of life differently now. And they're prioritizing,
especially education.
Yeah. And when you think about the costs of a lot of these things, people are starting to reflect and think a little bit deeper on whether or not those things that were core tenets of the American dream for our parents or for our grandparents, the evolution of society and what's important and technology and all it's a different equation now.
Agreed. And I think that the fallacy is that people see things that they want and are maybe not quantifiable for their financial situation, but they're willing to sacrifice their long-term happiness for a short-term goal. And that's a big mistake that people make. They'd rather, instead of investing in doing that in 3 or 4 years, they would rather do it now to then not have a house for 7 or 8.
Yeah.
And that to me just doesn't, that's unbalanced. That's too much of one thing and not enough of another.
I made a post recently on whether or not people are bullish on investing in blue cities and whether or not they're going to make a comeback, because certain cities have really struggled through this process, specifically the San Franciscos, the New York Cities,
Portland.
Based on blue policy and blue leadership. They have seen a lot of their asset classes, their businesses get impacted in a significantly negative way.
Yeah.
And I saw a glimmer of hope today in California.
I saw a couple things, this one now being included, but the other one too that we talked about, a couple W's.
Yeah. And this is where when you see things swing too far, this is where it gives me hope when you always say, hey, when the pendulum swings so far, you got to trust in a democracy that it'll find its way back to the middle, or at least swinging back. And in San Francisco, 2 city props passed with over 60% of the vote. Now, San Francisco is known for having the most liberal council and city leadership in the whole country. And Prop E was passed to increase police power to stop crime, and Prop F was passed to require drug testing for those on city welfare. In a city like that's a big deal when they were the complete opposite 24
Nobody
months
would
ago,
qualify for welfare.
defunding the police, right, and making sure that you're not even asking for a drug test, let alone requiring it.
You have to have a drug test to get a lot of jobs. Of course, you should be able to. You should have to take a drug test that's supported by the people working the damn jobs that took the drug test.
There are so many people, though, that I think are starting to really Huntington Beach. I think it was Huntington Beach, right? That passed the. They don't want any pride flags flying on the beach, or is that what it was? Something like that.
They said you can't have, there's no non-governmental flags allowed on the beach anymore. So they are specifying,
so not just
saying,
pride flags, but other flags that were non-governmental.
Non-U.S.
There you go.
They specified as to be U.S. governmental flags only. So you can fly the American flag, you can fly the flag of a state that you live in, and you can fly branches of the United States military, but you cannot fly a Palestine flag. You cannot fly an Israel flag.
No, that's just Huntington Beach, but damn.
Well, they said it was for, they said it actually when I read it.
Or was it the county?
I think it's the county, and then the cities inside the county can vote still to allow other flags, but it has to pass their city councils in order to do that. Huntington Beach will not do that. Huntington Beach, I believe, is in Orange County. And Orange County is a massive conservative area of Southern California, like where me and Matt live in Placer, which is the most conservative county in Northern California.
Yeah. Yep.
So it's a good thing. Again, I'm happy with people, anybody, if you're gay, If you believe that you're transgender, go off and do your thing.
Yep.
I am all for that. That is part of being in America, is freedom of choice and
Mhm.
freedom to choose to live
Agreed.
your life the way that you see fit. You should not be able to, in my opinion, in certain circumstances, raise children with you. I'm not saying gay families. I'm going to throw that out there. I don't think that people should be able to impose on young and moldable minds things like transgenderism, or that is not medically supported or scientifically supported.
Have you seen the videos of the black pastor? I wish I could pull it up because this dude is so funny, and he was. I mean,
I,
he's preaching in front of. I'm talking like a congregation of a couple thousand people, and it's
is
there.
it similar to what I'm saying?
Yes,
It's
very
just,
much so.
it's very much common sense. Like nobody wants to hear me jam my personal day-to-day down their throat, whether they care about it or not. I'm sure some people would and a lot of people wouldn't. And that's the situation where you get into that. You should not be able to you shouldn't be able to do a lot of things. And the main thing that I want to, like, I don't want kids to be affected, because the problem is when kids get affected, they're so like Play-Doh
Yeah,
at a
they're
young
moldable.
age. It affects them to where it's hard to fix, or to get them back on a normal track of life. And so
Yeah.
that just was what makes me the most sad and makes me the most frustrated, is that it's affected kids a ton.
I mean, I was confused enough as a almost straight young male, let
Yeah.
alone
I don't
start having
need,
somebody tell you what you are and
or
what to
saying
call
that, hey,
you.
you may not be the, and that's not appropriate.
Yeah.
And that's not, again, those conversations, if they're had, should be had with a family, inside the family, with the parents, and be private, and not the meme I saw recently that I thought was hilarious. Was a husband and a wife in the ER, and the baby's born. It says, is it a boy or a girl? And the husband says, we'll let the kindergarten teacher decide. And it's because, and the reason that's a meme now is because that's the
Reality of many situations in our society today.
that should not be a meme. And what 10 years ago, if that would have happened, nobody would have known what that means.
Yeah.
People know what it means now because it's a true situation. There's
Well,
a lot of truth told in every joke, and that's the sad part about where we're at right now.
I'll digress after this point, but when you look at the amount of anxiety and mental health challenges and the things that Gen Z and younger are dealing with and struggling with today, and the depression and the suicide rates, there's some common denominators in there that are pretty evident are contributing to these issues. And they're common sense things that have been normalized and forced down, their throats to accept, and the TikToks and the social medias of the world. Those are things that there were the two largest lobbyists for transgenderism in the United States, two Chinese billionaires.
There you go.
They're not even in the U.S., and they are the ones lobbying for a lot of these things and putting hundreds of millions of. So again, I'm not going to try and navigate and make arguments around this complicated and complex terrain. But again, I think there are some common sense things that we need to protect our youth. We need to do some things that.
Yeah, you don't give kids to pedophiles. That's all I got to say.
We got Idaho is leading the charge. I just saw Idaho House passes bill to give pedophiles the death penalty.
Amen.
Then on the other side of the aisle, you got people that are trying to normalize pedophilia as a sexual preference, and that it's actually
and I guarantee you that's happening in California.
It's crazy.
Or Colorado, or one of the other crazy. It's starting to come back to normal, but that's the type of shit and stuff that'll happen that will push it the other way, because I can't think of anybody, Republican, Democrat, normal people, that would say, oh yeah, that's, hell yeah, we believe in that. That's not normal stuff.
Well,
that is so extreme.
This last weekend, I was talking with some people that I would say were in the middle and didn't like Trump, and overwhelmingly are like, there's no way we can vote for the left. We are definitely going to be voting for Trump, even though we don't like him. And we just think about how much momentum is swinging back in that direction right now. It's tangible. It's palpable. Texas stood up to the feds, right, on the border. They won. You got Ronna resigned as the RNC chair, new leadership with, I think, Laura Trump coming into the RNC committee lead. You got Trump just murdered it in every single primary.
Yeah.
You got Mitch McConnell stepping down, a rhino who's been playing the left. Nikki Haley dropped out. You got the SCOTUS voting 9-0 to keep Trump on the ballot. You've got polling momentum. We're seeing more and more people really start to reject this insane liberal policy that, again, I'm not saying all liberals are bad, and I'm not saying all Republicans are right.
I'm 100% saying liberals are terrible people.
I'm
and
not saying
people
all of
on the
them are.
far right are not good either.
But I
There
wouldn't
should
say
never-
an extreme leftist and a liberal, I would say, are different. I know people
I
that are
don't-
a little looser on their belief system.
Liberal to me is an extreme left term. Just I don't know how to say
Right
right wing besides saying right wing. Those are the same thing to me. If you are a liberal person, you are a poison to the country, in my opinion. Just like a right wing person is. I don't think that's appropriate. It's not. It causes too much diversion, causes too much separation, and we all work together better as a country when we have some disagreements, but we meet somewhere in the middle.
Yeah.
I don't like any extreme form of politics. It's totally not appropriate. It's just not, because ultimately we get tricked into thinking that you and I agree on, if we were opposites, we agree on 5% of the stuff we talk about, when in reality we agree on 95% of the stuff we would talk about.
Both sides of the aisle do a great job of owning really key important topics that they use as their prop for
Gun violence for the left and abortion.
Yeah.
That's what it is.
Yeah, a big part of that is. So
Yep.
Today we had U.S. February core CPI at 3.8% year over year versus 3.7%, which was expected. According to all of the headlines that people are reading, CPI and inflation came in hot. It's rising again. Help us dissect, what do the reports show, and what does this mean for the future of rate cuts and the economy as we move into the second quarter of the year? I thought you had a malfunction and froze for a second.
No. The CPI did not come in high. It just didn't cool. So it's still stubborn is how I would say. This is why when there's people doing predictions or expectations or setting what are called street expectations, that's the average of all the street. And the street is the analysts, big banks, big investment firms. It just didn't go down. The thing that I think is funny is they harp so hard on core CPI being essentially flat. Headline CPI was the exact same number, just it wasn't expected to go down. No finger pointing at that, but nobody's making a big deal about producer cost expenditure, PCE, and that's what the Fed says that they're tracking to decide whether they cut interest rates. Other whispers that I've heard is the Fed may pull up their rate target higher, closer to 3% and away from that 2 to 2.5%, maybe making it 2.5 to 3%. So that they can hit their cut goals before the year end. Because it does look like it's going to be hard to get down to that 2%. And that's historically low for what we don't normally run that low anyway. We run around 2.5 to 3.5% as average inflation. And that's good for our economy as a whole. I'm going to keep an eye on PPI, which is on Thursday. Core is expected to go down. I don't know if it will go down, but PPI core going down to be a nice soft piece of data. And we also want retail sales to be good, but not like hot, like insane. And they were down about 60.6% on the last report. I think they're expected to be up 0.5% on this one, which still doesn't mean a full recovery. But if they come in really strong, that's going to be another stone on the balancing side of the basket, saying rate cuts will be pushed out towards a June date. And June is really looking like right now the only time where it can make sense. You're also starting to hear whispers like you brought up, Jamie Dimon mentioning that rate cuts may need to get extended past June. I don't think so. I think they have to cut rates before the election cycle in November, so that the economy can continue to move forward. Because keeping money that tight for so long, it's not good. And cutting too late would be just as bad as cutting too early.
But if the economy has shown that it's as strong as it is, even keeping money as expensive and rates as high as they are, is it that dangerous?
Yeah, because there's a time and a place where, are you going to go get a loan right now?
It's tough to make it work.
Not unless you have to.
Yeah. And
versus, can we make money more moderately accessible? Still make it profitable? Still don't make it 0%.
Yeah.
But can we get mortgages back to 5%? That's all we're saying. Can we get car loans back to 3%? Can we have consumer entry-level vehicles back at a 0% loan cost, that's where we need to be. And we don't need to be where you go down to Mercedes-Benz and you get a 0.9% loan on a car. That shouldn't be the thing. That too many people will take advantage of that. But we need to go back down to where we can have luxury vehicles, jumbo loans at an affordable rate. Money needs to be more affordable. The thing that the Fed is worried about, again, is a melt up. Because the second they cut rates, hold on, the market's gonna fly, and there's gonna be so many people that come off the sidelines for real estate.
Well, that's the challenging balancing act that Papa Powell and the Fed has right now in terms of demand is still great.
What did Powell say in his last speech when he was in front of Congress, when his last testimony about a week and a half? He said that indications are they're going to cut rates this year.
I don't know, because CNN just said that the U.S. economy is so strong that there might not be any rate cuts in 2024. So think about that.
I think that would be a good example of why not to get your financial information from headlines. The next Fed meeting, I think everybody knows they're going to pause. But what he says is going to be very much looked upon. We have our next PCE report on the 29th of March. If that trends down again, there's going to be a lot of people that are barking no cuts, or cuts aren't going to happen, or cuts are going to have to start reconsidering the idea of cuts happening in June and grasping onto that, because they're not making data based on core or headline CPI anymore. They said that their preferred gauge or metric for inflation on when to cut and when to start is PCE.
Yeah, I was going to say, you mentioned earlier that they're emphasizing PCE over CPI or PPI. Talk a little bit more about why they're focusing on that versus, or at least giving more emphasis to PCE versus the others.
They know that their supply chain that's being sold into the market. That was essentially, you have to imagine this. When you buy a product, that product was purchased months ago. And when the product was purchased months ago, it was priced based on when it was purchased. If the producer cost expenditure, how much producers it costs them to make or get their goods out, continues to drop, that has to and will start baking itself into the market. That's what they're saying. They're saying the problem with CPI right now is there's a large percentage of it, 40% is shelter data. So it's skewing that data point too much to where they have to shift their focus now back to PCE. Till pretty much the end of last year, it was core CPI that they were tracking. And then in December, they said they're going to shift that to PCE. PCE is now what we are tracking and thinking is going to be the most accurate forecasting of when the Fed's going to cut, because that's what they said. And so I'm not going to put words in their mouth or try to guess and say what they're going to do. They're going to watch PCE. So on the 29th of March will be a big deal. It's about 2 weeks from now. We'll see what the Fed is really thinking, and the FOMC rate decision meeting. Everybody knows that he's going to pause at this point. But
that's in, 2 weeks?
Maybe about a week or so. It's not too long. It's what he says in the testimony after. Yep. And because he should start indicating in the next 2 meetings, especially in the next meeting, that they would cut in June. I don't think it's going to be a shocker to the market. I think he's going to tell everybody before, so it gives time for the market to run up over a longer period versus absolutely skyrocketing.
So 401ks historically are one of the most powerful retirement account vehicles that people invest in. Right now, it's doing double duty as a retirement account and a source of emergency funds for more Americans. 3.6% is the share of 401k holders who took early withdrawals from their account last year for financial emergencies, which was a record number. Is there something to look into there, or what is the overall perspective that people should be taking away from that statistic?
That 96% of people that have a 401k didn't touch it. So I would just say that might be higher than normal, sure. But I don't think that's something that I would focus on, because I just don't think that's something I would focus on. It's like saying 96% of the time something good happens and 4% it doesn't. That sounds like some pretty low risk to me.
We saw 10,404 new AI job postings in January, which was a 42% rise from December of 2022. This is according to Axios. I know a lot of people have been concerned about AI taking away jobs in the marketplace. It seems like they're actually creating a lot of jobs. We've heard the bubble melting up a little bit around certain AI companies. Is there any new insider data supporting that being a bubble, or is AI here to stay? And is it priced in properly at the moment?
I don't think AI is a bubble because I think that we have the technology. We've had machine learning for a long time, which is really kind of artificial intelligence, but it uses human input to make it more black and white versus having more flexibility. So I don't think AI is a bubble. I definitely think I don't think it's a shocker that's going to add jobs because AI will require human input to be managed. It's just going to take away from some areas that are maybe lower entry job positions. So that's not like a very big shocker to me. And the nice thing is it demands a higher skill level mentally. So we'll get higher quality workers in the workplace as well, more sophisticated. Nothing against blue collar workers, just white collar work tends to be more impactful to the B2B, business to business sales, SaaS, service as a sales as a service, excuse me. That is a very big component of our US economy. So that I think is where AI is going. And that's why I don't think that there's a bubble there. I think it's just going to continue to create more jobs and more opportunity because we have something like the internet in the past, but we don't have too many people getting into it that have not done it before. We have the likes of Microsoft and Apple and Oracles and Amazons, very well established mega cap companies putting portions of their company towards that to diversify and to get on that train versus brand new companies that are hitting the scene and trying to be a part of something catch the flame before it fades.
Yeah. S&P 500 closes at an all-time high. I think you even mentioned the NASDAQ has hit an all-time high as well.
I think it did.
Are there any stocks or trades that you have made recently that, I know obviously you can't talk about everything, but that you've made recently that you can talk about that are benefiting from those all-time highs?
We bought Oracle on Monday at market close, and they beat on earnings very much so.
I saw that today.
Shout out to my clients that are taking more risks than some others, the individual stock portfolios that have that. We have it up about 12, 13% in 2 days. And that's the power of data. Data can lead you to that kind of stuff.
I was going to say, what made you guys, I don't know if you can disclose how big the bet was.
It was a lot. It was in the millions, multi-millions that we made and multi-millions that we allocated towards that for our clients. The reason we did is because they have an AI cloud computing data system. So the demand for their cloud computing, because it has AI built into it, is becoming very high. Plus, they had a very good revenue projection for a beat. So analysts revised their earnings down again a few quarters ago, and that set them up for this quarter to look very good. So that's why we sold our Enbridge positions. I think either all of them or most of them, not all of them. And we used that money to buy some Qualcomm. Or not Qualcomm. Oracle. Why did I say Qualcomm?
The number of 401k millionaires is nearly at an all-time high per Fidelity. The number of ultra-high net worth individuals, which defines as anyone with more than 30 million to their name, increased 44% in the past 5 years as well. I think the common denominator is individuals putting money into the market here.
It is. And the nice thing is if it's non-qualified investments like brokerage accounts and stuff, that's liquid, pure liquid net worth. And it's fully accessible, doesn't cost money to get it out. Yield on stocks. We have a dividend portfolio that pays north of 10%, but its growth is low. You have to choose your battle.
Mm-hmm. Yeah, depends on what your goals are.
You normally want to go for higher annualized return with modest yield because in stocks you sell to cover. The best thing to do is not live off the dividends. It's to reinvest the dividends, sell what you need, and take about a 5% distribution rate off of your portfolio balance. That's what we like to do. So that becomes the problem is you shouldn't. Don't really leverage into that. You use real cash to buy it. So it's a slower burn. But when you get to the point where you have multiple millions of dollars, the cost to get that income out is so much lower and the taxes on them are moderate. So it's a really nice passive way to earn income. And then the returns, you normally have a very easy pulling positive arbitrage. You can increase your rent per se or distributions on your investment portfolios by about 2.5% per year compounded forever. So it's nice. It just takes a lot more time to get to that point.
What are some of the conversations you've been having right now with clients? I know we talked about, obviously, you've been giving me updates on my portfolio, which is doing very well. And I know a lot of people are experiencing that same thing by staying invested,
Mhm.
continuing to put money into the market, dollar cost averaging through valleys and peaks. That being said, I know that is not all of the portfolio allocation that your clients have. Are all assets in your client's portfolio performing right now, or what some of the conversations are you seeing and running into with clients?
Yeah, we don't really have too many dogs. I think the only thing that people are asking us for some of our retirees or some people that have some fixed income assets, should we buy more stock right now?
Yeah.
It's almost no, we want to have those assets because bonds are going to have their day once interest rates get cut. They have an inverse correlation to interest rates go up, bond value goes down, interest rates go down, bond values go up. So we want to hold bonds through an interest rate cutting cycle and get rid of them through a hike cycle. They still pay good coupon rates. We're getting really high coupon rates. That's what the dividend payment is called in a bond. It's called a coupon rate. Coupon rates are really good, 3-4% on treasuries.
Strong.
Yeah, 5, 6, 7 on corporate. You can get high yield corporate debt close to 9% right now. I'm telling my clients that are retired to continue to hold those. I have some clients as high as 50% in fixed income. That's an appropriate allocation from when you don't need your assets to grow a ton anymore. If we can grab a 4 to 5% yield off of that, and then we know that in the very short term, that's going to appreciate a lot because of interest rate cuts. Maybe after cuts happen and the cycle moderates, we might think about moving to different areas, commodities, low volatility stocks, low beta stocks. But right now, everything's doing good. I think obviously the thing that's lagging the most is probably fixed income, but we still hold gold and we hold fixed income and we're not planning on getting rid of them.
I'm curious to get your thoughts on real estate with your clients, because I know that in a lot of my mastermind groups, a lot of guys who were absolutely crushing it with real estate have really hit some turbulence, really seen their net worth drop, really seen
Mm-hmm.
their cash flows drop. And it's a reminder, right, that no asset class is exempt from volatility and
Nope.
challenges.
Yep.
And you always have to plan for the rainy days and execute to achieve the best outcomes, but mitigate your risk and act accordingly as if the worst case is possible. And a lot of people didn't do that over the last few years with their real estate, and they're feeling it now.
Yep.
And I saw a lot of guys that had 20, $30 million net worths that are down 20, 30, some of them 40%, a few people that are getting real aggressive, even more so. What are you seeing with your clients who are holding real estate as investments right now, whether it's passive or active assets?
Some of them are faring just fine. A lot of them are faring fine are just weathering the storm currently.
Yeah.
Doing well, but not doing as good as they normally do. And I have a lot of people that are in that same situation where they didn't believe that this type of thing could happen, nor did they anticipate this type of thing would happen with interest rates and inflation being so sticky, and they're hurting. I'm talking to people that are having some serious cash burns right now.
Yeah. I know a lot of big fund managers who could do no wrong now are doing, these are prominent names too on social media, and people would know who they were if I said it, but individuals that were the golden children of syndications and funds and real estate are doing cash calls and are seeing some really challenging situations right now. And I think it's just a reminder that, again, if you're going to hand off your money to somebody else, you need to trust in who that individual is, trust in their team, trust in their track record, and also understand that the second you part with your money, that's the risk you take to potentially grow it to a higher level. So understanding the game that you're playing, hence why I say, hey, Ryan gets a portion of my money because I trust in his expertise and he is going to be the wealth builder in that arena for me. And that's my guy, and vice versa. I'm going to keep all of the chips in my wealth building basket under my attention, knowing that I'm considering myself the expert to continue to grow that. It's my job to steward and be a fiduciary of that and lean in and do everything in my power to protect it and grow it. And so having that same mindset in whatever that arena is, that's your core tree trunk, and then making sure that the branches of wealth building off of that core tree trunk, like working with Orion, another financial investor, other vehicles, that you're really trusting in who those people are, because now more than ever, we've seen people on social media who pitch a good game and don't have any true track record of success and have ultimately, unfortunately, lost a lot of people's money over the last few years. So I think it's really important now more than ever to be very prudent about who you're giving your money to. Hence why you offer the free financial x-ray, right?
Yes.
To have Millionaire Mindcast listeners
I
text
can
in.
help you make lots of money on that side of the street. And I can, the thing that I just went to.
You've never overpromised though. I will, like, when you say that, like, and somebody hears, I don't
tell you like, hey, I'm going to make you this, I'm going to make you some ungodly percentage, but I set quantifiable expectations. But for example, advisor with this client family I just met, they got about $2 million with them. He's at Morgan Stanley, and they're like, oh yeah, he's not charging us fees and this and that. Full fucking shit. Charging 1.65%.
So you did the financial x-ray. You went through their entire portfolio with a fine-tooth comb.
Yeah, they're paying about 56% higher in fees that they would have paid with us. And over the same period of time, with the same amount of risk, we would have earned them about 4% more. So it's just like
about a delta. That's a big delta.
Huge difference on that big of money. It's a huge difference.
At a compounded rate too, depending on how long they were stuck in that little rut, not knowing those things were going on. Hence why, if you're a Millionaire Mindcast listener, you want to connect with Ryan and his team, that's something that Ryan and his team do for free. Obviously, it's a way for him to connect with other amazing people like you who have wealth building goals that may just not have the best resources and or team behind you. So if you want to connect with them, text the word X-ray.
Edward Jones, Financial, any of these big box. If you're at a big box, Mass Mutual, Merrill Lynch, Kestra, the list goes on. Don't try to sue me. I can say your name, businesses. You should really take a look under the hood of some of those arrangements. And the craziest thing is nothing changes if nothing changes, and you don't know what you don't know. Why not figure out, if you do know what you think, get it verified by a third party. We have everything verified by a third party with tons of data, hundreds of pages of data to back it up. Find out if what you're doing is actually best for you. Because most of the time when I look at stuff, these people aren't doing bad things. They're just doing a Baskin Robbins and they got 31 tubs of vanilla.
Yeah.
Why not add some flavor? I got to say.
You guys can connect with Ryan and his team by texting the word X-ray to 844-447-5055. The only cost associated with it, it's just your time. So if you guys want to connect with Ryan, that's how you guys can do that. We've got some basic data around I wish I had something exciting to talk about when it comes to single family real estate, but there really isn't a whole lot to talk about. We still have historic inventory lows. Obviously, we know where rates are still sitting at, and the affordability is still at an all-time high. So at an all-time low. So that is a big challenge that obviously many individuals are trying to navigate. I did find it interesting to see what markets were the top cities that people were moving to. So we could talk about the top 5 cities people are leaving. We've got San Francisco at number 1, New York City at number 2, Los Angeles at number 3, Washington, D.C. at number 4, and Chicago, Illinois at number 5.
Blue, 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 blue.
The common denominators there.
Liberal.
Blue.
Democrat.
Liberal cities that have extremely high crime, insane prices on their real estate, and they
all blue states too.
Oh, every single one of them are, yeah, absolutely. And the most extreme blue states.
Yeah, they are. Illinois is shockingly a very far left state.
Check this out. Top 5 cities people are moving to. Number 1, Las Vegas, Nevada, Phoenix, Arizona, Tampa, Florida, Orlando, Florida. Coming in number 5, baby, Sacramento.
Couldn't believe it. But I told you we are. You know what I'll tell you? People up where we live are not liberal. They are not.
No,
they are not.
They're the outlier.
And a lot of people don't know how big Placer County is. All the way to Lake Tahoe. Mm-hmm. It's huge. Mm-hmm. So people in this area, some of them, a lot of them, normal working class people, everybody gets along. We have real neighbors. I was just at my buddy's house, and I had to pop by, and he said, oh, yeah, I'll be there in a second. My next door neighbor is elderly, and I just cut his lawn for him every few days.
Look at you.
Why?
Man of the people.
Not me. This wasn't me doing it. It's another person I know. But these are the type of people that live in this area. This is a great place to live. The problem with where we live is ultimately it's surrounded by this wrapper of California, and that really downs it sometimes. It's a really beautiful place. Shocking, though, that it's the 5th most. I would love to see where the data came from.
The data. Yeah. This was Business Insider. I would need to see if that's the source that was disclosed, but
Shout out, speaking of news outlets, shout out Deadspin for having to fire all your employees for running that stupid ad on the freaking little kid saying he had blackface. Now you guys are getting sued and you have to fire all of your staff so you can afford the lawsuit.
That's another
FAFO. That's all. FAFO.
It's another example of go woke, go broke.
Yep.
People are not playing that anymore. Wrapping up with Bitcoin hit a new all-time high above 72,000.
Then went back down to 68 and it's back up 71.
Yep.
You know what didn't do that?
What?
Solana.
You love Solana, huh?
Over the same period of time, it's up 25%.
You're ride or die. I saw Edward Snowden posted a tweet this last week that a very quote-unquote factual prediction, a national government will be revealed this year to have been buying Bitcoin, the modern replacement for monetary gold, without having disclosed that fact publicly. Curious, what, if any, importance is in this statement?
I think that would bolster the argument of its legitimacy more so, obviously.
If a government is just stacking...
Well, what government? Because Argentina has been doing that, and that doesn't necessarily impress me from a financial standpoint.
Yeah.
So it would depend on which government has been doing that. Is it a China? The thing that could backfire on that is if it was like a China or a Russia or an Iran. That would not be a good look for Bitcoin. So that's one that nobody could really predict. I guess you can know the ups and the downs and speculate, but that would be very interesting to see if that does come to fruition. And if it is a major superpower, if it's one that's people are more favorable towards or one that people are unfavorable towards.
Yeah. As we wrap up today, I was having a conversation over the weekend with a younger guy that was in this group, and somebody was mentoring him, and he kept saying, "I hope." And as I walked away from that conversation, I hope I can be wealthy like you guys. I hope I can be successful like you guys. And it was really interesting for me because my language models, I become so aware of them. And my piece of advice to him was, because a lot of people are smoking hopium, I hope I have a better life. I hope I can get a 6-pack this year. I hope I don't get fired, versus I'm going to make this shit happen. I am going to do X. I am going to be wealthy. Like, just that conviction in your self-talk and your language makes all the difference in the world. So if you're a hoper, if you're smoking on that hopium, I would encourage you to be aware of that and to shift your language to, I am going to be wealthy. I am going to get healthy. I am going to have a happy and successful marriage, and get in there and execute. Right? Hoping and wishing is never going to do it. Manifesting these things, you have to have consistent action in order to bring these things to life. And the beautiful thing is, you don't need to be that smart. You don't need to be that talented. You just need to be consistent and take that action towards whatever it is that you are going to unlock. It's just a matter of time. In my head, and I know you and I talk about this all the time, it's only if we want to do something, it's not a matter of if it's going to happen. It's just a matter of when. And when you get the right people around you who are encouraging you, who are challenging you, who are poking holes and all of those things, who are calling out some of those types of mindsets, bringing awareness to your blind spots, and you're an executor, sometimes that's all the difference that you need. So that was my final thought of today, switching that mindset. If you're a hoper, you're not a hoper. You're a doer. You're an action taker. You are going to make this stuff happen. It's just a matter of time. You just need to get clarity and a plan, surround yourself with the right people, and get into the trenches and do it. So with that being said, we appreciate you guys tuning in and listening each and every week. Again, if you enjoy the show, all we ask, take 5 seconds to leave a review, share this with somebody. We appreciate you guys tuning in each and every week. Don't forget to check out millionairemycast.com, the store, all the great stuff that we have there for you guys. And with that being said, we will see you guys in next week's episode. Keep investing in yourself and your wealth on your march to $1 million and beyond.
Cheers, y'all.